How's it going, everyone? It's Sam. I hope you like this video because I actually had prepared that genus video for today, but I had to redo it, so I had to push it back, and I was gonna release it tomorrow, but I wanted to release it today so that you got the latest up-to-date information. So if you don't mind, after this, going and watching that, and I'll link it here. But I have an exciting video today about CIELO, or Cioxy, which is actually a large Brazilian credit and debit card operator, which you might or might not have heard about, but on Robinhood's app, it's been going crazy. So there's a website that tracks the number of users that have added or gotten rid of a position today, and it was the number 2 most gained position in the whole app. So more people are buying this stock and starting it in their portfolio than every other stock on Robinhood except for one, which is Genius. But we're going to get into it here because 3,000 people were holding it before, now 12,000 people are holding it today. So we're going to get into the information. It's a penny stock, so take a look at it. It might be worth investing in. Make sure that you do your own research, but we're going to talk about it real quick because it's kind of interesting. So in case you're wondering the scale that Cioxy works at, or CIELO SA as they go by, it is the largest Brazilian credit and debit card operator, and they have the most point of sale transactions. So they are pretty sizable. The revenue's right around $3 billion. So they've been around for a good amount of time too. They've been around since 1995 when they were founded, and I believe their IPO was right in 2010. So they've been around the block for a little while, so that helps out their case, but they are a penny stock. So as you can see here, it went from about an 80-cent stock up to about $1.70 stock today. That's a crazy amount right there, and it went up just within about 10 minutes. So insane. We're going to look at why that happened, but before we do that, if you don't mind hitting the like button, it really helps out the channel, and I'd really appreciate it. So definitely do that. So as we look here, CIELO, or Cioxy, announced with Facebook today, or yesterday by the time that you watch this, that they are going to enable payment transactions via WhatsApp in Brazil. So if you don't know what WhatsApp is, it's another platform that Facebook owns, and I've talked about it before. It's very slightly, if at all, monetized by Facebook, but it's one of the largest platforms that they have. So they have Facebook, Instagram, and WhatsApp. WhatsApp is huge outside the United States, and this is one of those things where Facebook can add a bunch of revenue, and it's quite amazing. I have a ton of videos on Facebook, and I'll throw one up here too if you want to take a look at Facebook. But they announced today that they're going to enable payments through the app, and I believe they have about 1.5 or 2 billion users on WhatsApp. So as you can see here, those interested in making payments to other people or companies will need to register and validate their debit or multiple cards on WhatsApp. So it shot up the stock. As we can see here in this article, it says there are usually no more than 1 million shares on a big day, and I read in another article it's closer to 250 on an average day, 250,000 that is, and today it was traded over 11.7 million times. So that's an insane amount, hence why it went up so quickly. And we're going to dive into the actual balance sheet and income statement from Cioxy and see what it shows us. So it is about a $2.2 billion market cap, so a lot smaller than MasterCard and Visa, stuff like that. Their PE is right around 10, and I would be careful right now because it's really hard to trust PE ratios with everything that's going on in the economy and in the world right now. So a lot of companies have been reporting poor numbers or really good numbers for this, that, or the other reason, and it's really skewed their PE ratios recently. So you really have to go through their earnings and take a deeper look. But you can see it's a decent sized company. It's a company that's not some $300 million company that's trying to get into the credit card or debit card space. It's sizable, and as you could see there too, it is a penny stock, so it does have a little bit more volatility to it when you think if it goes up a cent, it goes up 1% basically. So that's interesting and something that you should note too. But as we can see here, the revenue has kind of been all over the place just over the last 5 years. It's gone from 2.8 billion to 3.8 billion, back down, all the way down to 2.8 again. So not a great track record there. The trailing 12 months is pretty low too at just 2.2 billion. But as we go down here to net income, you can take a look at that too. They grew it and then it's fallen down really significantly. So it's down to 230 million over the last trailing 12 months. So that's something that worries me. The fact that it's a penny stock and the net income has been dropping. And as you can see here, this is a stock that used to be pretty expensive and it's just dropped over time. And if you guys want me to do another video, a follow-up video on this, I'll look deeper into this and then also see if they've had some share dilution over time too. But I wanted to just go over the balance sheet, be a little bit more simplified in this one. So as you can see here, the earnings per share went up and then dropped back down to 15 cents. Now for the price, it's not that bad, honestly. So trailing 12 months, 9 cents, and it's a 90-cent stock. So it's not really that bad overall because it's still like a P ratio of 10 then. But the fact that it's dropping causes a little bit of caution there. And as we see here too, they have a high payout ratio for their dividend. They haven't really been making money compared to what they have to pay out in dividends. So that's something to be cautious of too. If you think that this is going to pay out some really nice dividends, it could. It looks like they try to pay out dividends, but they've had to pay out too much for what they can handle recently. Now, if we look at their cash and short-term investments, which is really important in today's day and age with everything going on, you don't know what's going to happen. You can see they have about 1.1 billion, which on a $2.2 billion market cap is really good, but they have a lot of debt here. So total receivables, they have about 12 billion. If you go down to their total current liabilities, they have about 11.5 billion. So depending on how fast they get those total receivables in, it might not be an issue, but the fact that they're about equal, let's say their receivables take longer to get in than they have to pay out their debt, that is a little bit of a hairy area there. So take a look at that. Know that that's going to be there, and that's something that you have to consider. And then also, if we look down at their book value per share, it's not bad. So it's about 66 cents, but it has been decreasing heavily over time. So it was up to about $1.30, which is double what it is now. In just 2 years or 3 years, it's dropped down to 66 cents. So take that into consideration. Now, even though it's up 20% on the day, I think that it could run up more, but this is something where I personally don't have enough knowledge in this space to know what this means for Cioxy. I get that it's good news that they have something set up with Facebook, but what does this turn into? What kind of revenue does it generate? What kind of net income does it help them get? It's hard to tell at this point, but I think time will tell. This is definitely a stock to put on your watch list. It is something that's really cheap. Even if you just wanted to dip your toe in the water, you could possibly just pick up a couple shares with some dividend income or something like that. Just as a reminder too, I am not a financial advisor and I don't do this in my day job, so do your own research like I've said a couple times. But I will say there is an extra element because this isn't a United States stock that I don't know exactly how they operate in these other countries. I've heard reports out of China that some stocks have looked fantastic, and then people were just messing with the numbers for revenue, income, stuff like that. And that's just something to take a careful look at. I'm not saying that they're doing that. I'm just saying with US companies, I kind of know how it works, but with these other countries, things can change. So take a look at that. Also, I do want to point out that companies like Visa and MasterCard, as you can see here, are trading in the mid 30 to high 30 PE ratio. So this stock is a lot cheaper for the price to earnings value, but Visa and MasterCard are tried and tested as great companies over a long time that have been trying to increase dividends to shareholders and just earn more money, while companies like Cioxy have actually been decreasing their numbers over time. So take that into consideration too before you buy this. I don't think I will be buying this yet because again, I don't know what this means for Cioxy, what the revenue will be, what the net income will be after they secure this deal with Facebook, but that is why the stock has been going up so rapidly. And if you were curious about that, that's why. Take a look at it. Let me know what you guys think below. I'd be interested in knowing. And if you guys want to start with Robinhood, this isn't sold on WeBull yet because this is an OTC or over-the-counter stock. It's not something that you can buy on any platform. And that's because, for the most part, it's a penny stock. So a lot of these other platforms won't sell it. So if you guys want to use my link to Robinhood and pick up some of the Cioxy, you can get a free stock when you sign up and deposit some money. So I'd appreciate it. It helps out my channel and it helps out you get started with Cioxy. So thank you guys for watching. I appreciate it, and I will see you in the next video. Bye.